Happy Friday, everyone. Welcome back to another video. We've been having quite the week in the stock market, up and down, moving crazy left and right and whatnot. So along with that, kind of want to let you guys know where my head's at, what I think is realistically going to roll out. And I'm going to give you some theories on why I'm thinking this way, just kind of based on what I've been collecting data-wise. So without further ado, let's get into it. So overall, I think the main thing that's holding the market back a lot right now, and the reason we've seen a lot of pullback, is due to the uncertainty with the government shutdown, right? A lot of people believe that the government shutdown would just be, for a week or two. It wouldn't be something that lasts this long. I think it's been a month-ish almost, and that's hurting a lot of segments and it's causing a lot of uncertainty in the market. So people were hesitant to be invested, right? This is why, I like to bring up the fear and greed index, which, I'll put on the screen here. If you're looking at it, currently we're in extreme fear, right? And there's been many famous investors, even Warren Buffett, who comes out and say, you should be fearful when others are greedy and be greedy when others are fearful, right? One thing that I like to use this fear and greed index to kind of gauge is is the money in the markets, right? Are people deploying their capital in the market to take advantage of these opportunities, or are they kind of keeping it on the sidelines in cash and that type of idea to be safe and wait for opportunities, right? So based on this, I believe a lot of people are keeping their capital on the side. Of course, there's plenty of investors, so there's money in the markets, but there's a lot of cash on the sidelines as well, kind of waiting for opportunities or waiting for some of this uncertainty to clear, right? On that, I saw some news today that the government's kind of getting to a point where they're trying to make a deal to reopen it, so things can go back to being business as usual. Some downsides to government being shut down. Obviously, people can't get approved for business loans. You might not get some of the economic data, such as the inflation reports, kind of that type of thing. And those are essential things. One, to keep growing the economy. Two, that data drives a lot of decisions for executives and other people that are playing in the market, right? Now, while we are in extreme fear and greed, it's a very interesting place to be because we're almost at all-time highs. Like we're pretty up there compared to 50-week highs for a lot of the big, Mag 7 companies and even the S&P 500 index. And that's because of these large hyperscalers that have been carrying the markets, right? However, what I truly think will happen is because we have all this uninvested capital sitting on the sidelines by investors, when this uncertainty clears with the government shutdown, we had the China tariffs before, but thanks to that trade deal, that kind of cleared some of the uncertainty. When the government gets resumed, we're going to see a lot more people enter the markets, and we're going to see that drive the market back up. Now, I don't know if this will be by the end of this year or sometime early next year, but I think this, along with proposed rate cuts, whether it's December, January, or for like earlier on in 2026, is really gonna get people spending money again, and it's gonna cause the companies to be more profitable, to grow their revenue, and ultimately it's gonna cause the stock market to run up. Now, along with that, we've also had earnings season, and a common theme that I've seen, we have companies that are reporting pretty strong earnings, but yet absolutely butchered in the market. We've been seeing some crazy drops in stock. For example, I saw DoorDash drop 20%, Duolingo drop 30%, Meta is down, I think almost 20% as well, right? And actually, two of those three companies are companies that, I'm taking a liking to, and I'm thinking, oh, I am already starting positions in them, that being Meta and Duolingo, right? So, first one I want to talk about is Meta, right? Meta is one of the biggest social media app and advertising agencies that's in the world. Their outreach is insane. They have daily active users, monthly active users. People use their apps, for entertainment, to communicate to each other, to advertise products for their business. There's so many use cases for their products, and their products are so sticky. People go on Instagram and scroll reels for hours without even noticing. You just get hooked on it, right? And the main reason that Meta has been getting beat up after their earnings is one, they got hit by a $16 billion tax. Two, they are spending a lot of money in capex. Essentially, they're investing capital into AI, right? And the last time Meta did this was with the metaverse, which, no one talks about the metaverse now, so it's kind of a flop. So people are scared that Mark Zuckerberg is over investing into the future and he's not being conscious of their shareholders. However, I think Wall Street is kind of pricing this incorrectly because when it comes to AI, you want to be the leading innovator, right? And the way he's investing this capital into this AI super lab that he's building, paying people hundreds of $1 million to sign on for Meta, getting the best, LLM researchers and whatnot on his team, is regardless, even if he isn't the leading company with AI in the future, this investment in AI will help them optimize their company, increase their efficiency, and ultimately drive their profit margin up. So while in the short term, investors in Wall Street are not liking this, in the long term, I think this is a really good play. So I think the price that we see right now for Meta, I think it's near $600 a share. It's a great opportunity to get into this company because the amount of revenue, their profit margins on their advertisement alone is insane. I think they're like it's 60% margin rate on their advertisements, which is like a beautiful business model to have. And digital marketing is only going to keep growing over time, right? Those billboards, no one's going to use that anymore. The radio, whatever, not. It's just going to be digital marketing, especially with UGC content and whatnot. There's so many ways that people are advertising nowadays on that. Now, going a little bit into Duolingo, right? Duolingo got absolutely massacred. I think they were down 30%. Of course, I'm going to add little pictures for all of this after their earnings. And the main reason why, there's two main reasons. One, their outlook for the next year, essentially their customer acquisition rate came a little bit below Wall Street expectations. And two, their daily active users didn't grow as rapidly as estimates were, right? But overall, the company is still growing at a 40% rate per year, right? Year over year. And if you look at their revenue chart, I mean, just 4 years ago, their revenue was like 200 million. Now at their 800 million. That's crazy growth. They've doubled twice in that time span, right? Along with that, their app is pretty sticky, right? Speaking not just, my personal experience, I'm saying what I see my friends doing, what I see coworkers doing, even my family. My mom has a 3 year streak with Duolingo. They make this app so sticky that you have people who come back every single day, every single month for years on end, right? And it's free, right? But they're also converting their free users into paid users, right? By removing ads and stuff. And even the users that are using it for free, they get ads. So Duolingo is making money on free users and paid users, right? And along with that, they have currently 50 million daily active users. That's insane to think about. 50 million people go throughout their day, every single day, and go and complete a lesson on Duolingo, right? And this is just for language learning, right? They're expanding the market that they have. They're starting to introduce chess lessons. They want to get into math and science subjects, right? Duolingo wants to be the future AI app for learning, right? Its goal is to implement tutoring that humans cannot recreate, right? And the advantage that they have over ChatGPT and the live language transaction is that they have the stickiness. People are used to being on this app. It's a habit. It's so hard to detach from a habit, and they're constantly increasing their outreach, the amount of clients that use their app, the amount of users they're converting to paid users. And as they increase the amount of subjects and disciplines that they can teach to people, more people are going to join, right? Imagine they start teaching English, science, math, and whatnot. Parents are going to start putting their kids to learn on Duolingo, right? Not full time, but a few extra lessons here and there that are useful, that they can test their kids and like develop their critical thinking skills outside of school, right? Because we all know not every teacher is the same, right? We have really meaningful teachers that have blessed our lives and touched us forever, but we've also had really atrocious teachers that are just there to do the bare minimum and get the job done. They don't care about your development as a person, right? Duolingo is going to utilize AI to revolutionize the way tutoring is going to work, right? You're going to have a sticky approach to learning that has you coming back consistently, and they're going to make the material digestible so that you can grow, learn, review, and get better over time. Now, one thing I want to mention, right, was one, I'm definitely not a financial advisor by no means. These are just kind of my outlooks on these two companies, and they're companies that I have taken interest in. Another thing that I want to mention when discussing these two companies is portfolio allocation, right? Meta is a lot larger of a company. You can maybe put 5, 10% of your portfolio in Meta. That's fine. You can get away with that. I think Meta is going to recover beautifully. It'll probably be $1,000 company in the next few years. I'm confident that my Meta investment will pay off in a few years, right? And that's what investing is for me. Long-term gains that outperform the S&P 500, right? That's my goal. And I see that as a huge opportunity. Now, with Duolingo, right? This is a small company. I think their market cap is like $10 million. Oh, sorry, $10 billion. Yeah, $10 billion, right? With this size company, it's very volatile. Like after earnings, every other day, you see the stock going up 5, 10, 15%, or dropping down the other way, right? It's very volatile in both directions, right? So of course, when I'm talking about Duolingo, I'm very passionate about this company, and I think the way we learn will change over time with AI. And Duolingo being the biggest customer of OpenAI, I think they will have a great position to conquer that market and be very successful. But I'm not going to over-index my allocation into this company, right? Because as mentioned, there is still risk. No investment is riskless. Every investment has some type of risk to face, and there's definitely a lot of risk with Duo. However, I think the risk to reward ratio is worth taking that chance, right? I think the reward potential from here is insane to think about. Like if Duolingo was to get to $100 billion market cap over the next few years, that'd be a 10x of the current investment that I make today. That is mind blowing to think about. And I think they can definitely do it as they expand market share and add more courses. That being said, with allocation being the key topic here, I wouldn't put no more than 2% of my total net worth invested into Duolingo, right? Because let's say I put 10 shares at $200 a share. That's roughly what the price is right now. That's $2,000. Cool. If that goes to zero, I lost $2,000. I can live with that. I'm not always going to make the right choice. That's part of being a person and learning, right? But on the flip side, if this $2,000 turns into $20,000 over the next few years, I'll be ecstatic. That's amazing returns, outperforming the S&P 500. And it's because I made a smart, educated choice on a company that I thought was being undervalued by Wall Street and other investors, right? So it's all about that risk and portfolio allocation management, right? And again, I'm not telling you to buy Meta or Duolingo. I'm just sharing my thoughts on why I think these two companies are good picks right now. And, as mentioned, if my thesis plays out where the market will rip up going through 2026, I think I will be favored in my returns and I will outperform the market, which is always my goal here. That being said, I got pretty passionate during this video because this is something that genuinely interests me. This is why I switched my major to economics because this is something I have a passion for and I can talk to people and I love talking about it, right? That being said, if you have any questions or if you thought something I said was wildly wrong, please give me your opinion or comment down below. I love to read them. It's always a good way to reflect on the videos that I make and improve over time. Hope you guys enjoyed this one and I'll see you guys next week. Peace.